Hi, welcome back to the Crypto Hangout, where we talk all things crypto 7 days a week. Before you watch the video, take a second and hit the like and subscribe button. Help us reach 100 subscribers by December. Thanks for clicking. Enjoy. What's going on, everybody? It's Crypto Crane here. Today is September the 30th, 2021. And just want to bring you some news, some latest government news regarding crypto and the SEC and regulation. So we have Treasury official, crypto needs adults in the room, should embrace regulation before crisis hits. Bitcoin jumps as SEC Gensler reiterates support for futures ETF. Dollar rally may cap gains. Crypto products offering returns cannot avoid regulation, says the Grinch, aka Gary Gensler. And opposition mounts to Biden's OCC pick, fears she could regulate crypto into oblivion. All right, so let's go ahead and get started. Crypto needs adults in the room, should embrace regulation before crisis hits. As regulators circle cryptocurrency, acting comptroller of the currency, Michael Hsu, warned that the U.S. could be heading for a new financial crisis if oversight of the industry isn't tightened. If the crypto industry doesn't evolve or is more responsible, then we will be headed for a potential rerun of 2008, Hsu told Yahoo Finance in an exclusive interview. The official is one of several crypto skeptics within the Biden administration who have taken more of a hard line on regulating the booming digital coin movement. Okay. Hughes sounded the alarm, but noted that there's still some time to guard against a crisis. He doesn't expect the sector will blow up in the near term, but we are at a point where there need to be some adults in the room that guide this industry into a more responsible place, he added. Hsu said that cheerleading about crypto and how it will change the world is overshadowing a more responsible conversation that's needed about how the product works and how it should be developed in a more responsible way to meet the needs of consumers. One of those cheerleaders, Tesla CEO Elon Musk, said this week that when it comes to regulating crypto, the US government should do nothing, believing that official intervention would hold back growth. It is not possible to, I think, destroy crypto, but it is possible for governments to slow down its advancement, Musk told the Code Conference in LA. Hsu appeared to be sending a warning to the industry: regulate yourselves before the government overregulates you. And I kind of agree with that. You want to put in some preemptive measures and kind of regulate yourself because you don't want the government coming in. As you can see, the Grinch, aka Gary Gensler, has been trying to overreach and overregulate, the crypto, and causing much harm to investors and those that are retail investors in the market. Bitcoin jumps as SEC, the Grinch Gensler, reiterates support for futures ETF. Dollar rally may cap gains. Bitcoin's negative correlation with the US dollar is now the strongest since early March. What looked to be a down day for Bitcoin is turning positive, courtesy of renewed speculation that the U.S. could soon approve exchange-traded funds or futures linked to the top cryptocurrency by market value. Bitcoin has gained 4.5% to trade near $43,400 one day after exhibiting bearish price action. The cryptocurrency failed to keep gains above $42,000 on Wednesday, hinting at further weakness as pseudonymous Trader1SZ noted on Twitter. However, the cryptocurrency picked up early today, possibly in response to U.S. Securities and Exchange Commission SEC Chairman Gary Gensler reiterating support for a narrow class of Bitcoin ETFs that would invest in futures contracts instead of buying the cryptocurrency directly. There is some newfound optimism around the launch and approval of an ETF in the U.S., said Matthew Dibb, Chief Operating Officer and co-founder of Stock Funds. Canada's decision to approve multi-cryptocurrency ETF that holds Bitcoin and Ether may have added more impetus to the advance. The U.S. SEC's final verdict on several Bitcoin ETF applications and its first response on futures-based ETFs is due next quarter. The consensus in the crypto market is that the ETF would become the most important source of demand from yield-hungry institutional and traditional market investors. The first gold-backed ETF in the U.S., the SPDR Gold Trust, was launched November 18, 2004. Since then, the metal's price has developed a strong link with the SPDR trust flows. Data from ByteTree Asset Management show Bitcoin ETFs and funds now own around 801,000 BTC, amounting to 4.3% of the total supply. Holdings ballooned from 250,000 in 2019 to 800,000 today and helped drive the Bitcoin bull market from 5,000 to 64,000 before flattening off, ByteTree Asset Management Chief Investment Officer Charlie Morris said in the latest ByteTree Market Health Update published Wednesday. Crypto products offering returns cannot avoid regulation, says SEC boss. Cryptocurrency trading and lending platforms that promise returns to investors are wrong to think that they can avoid regulation by the U.S. Securities and Exchange Commission, the agency chair has said. The Grinch, aka Gary Gensler, told the Financial Times Future of Asset Management North America conference on Wednesday that investors in such crypto products deserve the same kind of safeguards against fraud and manipulation as bank depositors or purchasers of insurance policies or mutual funds. This crypto space is now certainly of a size that without those investor protections of banking, insurance, and security laws and market oversight, I do think somebody is going to get hurt, he said. A lot of people are likely to get hurt. Gensler's innovation comes days after Coinbase, the listed cryptocurrency exchange, shelved plans to offer a digital asset lending product, initially promising a 4% yield after running into resistance from the SEC. Coinbase had argued that the product, called Lend, should not be considered a security under federal law. The SEC disagreed and threatened to sue the company if it launched Lend, Coinbase said. The SEC's position is based on a Supreme Court ruling called the Howey test. It holds that an investment contract subject to federal security laws exists if a person invests his money in a common enterprise and is led to expect profits solely from the efforts of the promoter or a third party. In recent months, the Grinch has urged cryptocurrency platforms to contact the SEC and discuss whether they should register with the agency. On Wednesday, he noted that some companies have said things publicly about some of those conversations. There are going to be times that people come in and say, "We registered," Gensler said. It's not going to be everybody comes in and says, "Can you please tell us why we are not a security?" He said that crypto platforms that accepted funds from investors and offered returns should consider the securities laws carefully and talk to the agency about getting registered. He added, many of them should register now or should have even in the past. Gensler spoke to the FT conference after presiding over his first public SEC meeting as chair. During the meeting, the commission voted in favor of a proposal to expand requirements on proxy vote disclosures for investment managers, including mutual and exchange-traded funds. The SEC said that suggested amendments, including standardizing proxy vote disclosures and reporting data in a machine-readable format, would help facilitate investor analysis. If ultimately approved, these measures would update a disclosure regime launched nearly 2 decades ago. Opposition mounts to Biden's OCC pick, fears she could regulate crypto into oblivion. Texas Senator Ted Cruz is among a number of politicians and bankers who are opposed to the nomination of Sulay Omarova. Resistance is mounting to United States President Joe Biden's reported plans to tap a staunch banking and crypto critic to run the Office of Comptroller of the Currency. The proposed nomination of law professor Sulay Omarova to head the Federal Bank Regulatory Agency has raised eyebrows in political and financial circles, as she is widely seen as anti-crypto and anti-big banks. Senator Ted Cruz has become the latest crypto ally to speak out, claiming that her decisions, if nominated, would change the future of the industry in a tweet on Tuesday. Not only is Sulay Omarova Biden's pick to lead the OCC a threat to our traditional economy, she also wants to regulate crypto into oblivion. Crypto faces future-defining government regulations. This nomination needs to be stopped. A number of big banks and banking associations also against the nomination, with the American Bankers Association debating whether to publicly fight the decision. ABA President and CEO Rob Nichols said, "We have serious concerns about her ideas for fundamentally restructuring the nation's banking system," in a statement on Friday. Ranking Republican on the Senate Banking Committee, Pat Toomey, also spoke out in opposition of the nomination last week, stating that he has serious reservations given her extreme leftist ideas. Rebecca Rainey, President and CEO of the Independent Community Bankers of America, said that Omarova would displace locally based community banking and restrict economic growth in local communities, according to reports. The OCC oversees American banking giants such as Goldman Sachs, JP Morgan, and Citigroup, and would also encompass aspects of the crypto industry. Omarova, who has previously said she wanted to end banking as we know it, is expected to enforce stricter rules. She has also claimed that the rise of cryptocurrencies is benefiting mainly the dysfunctional financial system we already have. She shares views with anti-crypto lawmakers such as Senator Elizabeth Warren, and that digital assets threaten to destabilize the economy, according to Bloomberg. For her part, Warren stated that the nomination was tremendous news and looked forward to heavier regulation. The OCC has morphed from one of the Treasury's most crypto-forward agencies into one that changed direction under subsequent leadership. Brian Brooks, former head of Coinbase's legal team, joined the OCC in March 2020 and paved the way for legislation allowing banks to custody crypto. In January, the banking regulator told national banks that they could run independent nodes for distributed ledger networks such as stablecoins. However, the tone has since changed. On September 21st, Michael Zhu, acting head of the OCC, warned that decentralized finance products are similar to those that catalyzed the global financial crisis in 2008. So that will be today's news for September 30th. This is Crypto Crane. So you guys tell me what you think about today's video. If you like the content that I am providing, please subscribe to the channel. Like the video, hit the notification bell, and leave a comment. Let me know what you think about today's articles that came out today regarding the cryptocurrency, about the OCC pick, Biden's new OCC pick, and as far as the Grinch, aka Gary Gensler, saying that crypto products offering returns cannot avoid regulation, and it's what the Treasury official says about adults needing to be in the room when the crypto conversation commences. This is Crypto Crane signing out. Peace out.